August, right? That you know. And August, as Steve could tell you, is a notoriously tough month so far for the Dow. It's resulted in about a 3% decline, close to 4% for the NASDAQ, a little bit more than 3%. But it has a history, and we're going to be rifling through this on some prior years. In August 1990, when we were dealing with Iraq invading Kuwait, we saw the Dow fall more than 10% that month. In 97, when we had the Asian contagion, we're going to be going through this, but to show you there is something about August. Maybe when people take vacation and they don't realize that everything gets clobbered while they're away. To read from Lindsay Piegza, we've got Bob Iacino and Jonas Max Ferris. Lindsay, there is something about August maybe, and maybe all this just sort of dovetails with that. But this month is still young. What's going to happen now?
Well, it is, and I think there's a lot of concern, particularly on the Federal Reserve side. The concern at this point is that the Fed is going to be in this one-and-done scenario, as they describe the latest July rate cut as this mid-cycle recalibration rather than committing to the beginning of a longer-term trend of rate reductions. And so there is a lot of uncertainty in the marketplace about whether or not the Fed is going to step up and support the economy, support the market. Now, that's not our call. We do expect the Fed to reduce rates as early as September, but that is the level of uncertainty and concern. Of course, that being said, the market wouldn't be clamoring for additional accommodation from the Fed if we didn't have these layers of international uncertainty, including slower global growth and, of course, deteriorating trade relations. So there is so much that the market is looking at, trying to parse through to decide how much of the risk is going to come to fruition. And if we do see that risk come to fruition, will the Fed be there to provide a backstop and provide additional stimulus for the market?
I'm sorry, Lindsay. It looks like, without reading too much into the signals the Fed is sending, Bob, that it's going to be as accommodative necessary to deal with this trade thing. But I'm beginning to wonder, given how low rates are abroad, that they can keep up with that, or they want to keep up with that. Bob?
Well, Neil, they can't
race
to the bottom on. Yeah, they can't race to the bottom on rates. And you saw the Thai Central Bank cut rates today. Royal Bank of New Zealand cut rates 50 basis points. They've only done that 3 times during the Christchurch earthquake, great financial crisis, and after 9/11. India cut rates. The Fed, it needs to keep up, but I don't believe it has pressure to keep up. I believe there are economic rain clouds. That German number this morning, to me, was the reason the yields collapsed here. If you give $100 to Germany, you get $94 back after 10 years.
That's incredible.
Those who have a mandate to buy treasuries came here this morning in droves. We saw the money coming in. That reaction by the stock market, I think, was normal. It's a lot of quantitative reaction. But as you see with the comeback, nothing economically changed in the short term here. And the new tariffs have not been imposed yet. They've just been threatened. So there's a lot to go on in terms of people bargain hunting, at least in the short term.
You know, we were just showing a gold today, Jonas, that a nice jump. It's been actually bucking the trend, maybe a safe place to park cash. What do you make of that?
It's not so much it's not a safe place, first of all. It's one of the most volatile assets you can buy. It is strictly a bet that rates are artificially too low temporarily and that we're going to have inflation in the future. That's kind of always the gold bug bet thing, that somehow these negative rates all over the world are going to create massive inflation that we're never going to be able to get out of. That hasn't happened for 10 years. Inflation, we can barely keep it above 2% at all. So, I personally, look, there's a complicated story here about the tariffs, where those are going to go. Are they going to kick in? How low are central banks going to go with short-term rates? But there's also a very simple side. Right now, rates are low. They've dropped a lot since last year. There's a lot of mortgage refinancing going, but what ultimately happens is the consumer going to start spending a lot more money because of it? Leases on cars are going to get cheaper. New home purchases are cheaper at these prices because the payment's lower. That hasn't happened yet. And if it really is a head fake and there's a strong underlying economy now, you're going to see some real fast action going on in the economy, which will make stocks go up. Or we are on the edge of a European-style economy where we deserve to have 1% or lower interest rates, and people aren't going to go run out and buy a car or a house just because rates are lower.
All right. Yeah, it's hard to say, hard to gauge. We do know we came back from a nearly 600-point free fall in the Dow to essentially unchanged by day's end. We'll continue following it. Guys, I want to thank you. In the meantime, so much going on today.